Welcome to AMP Capital's Advisor Education Series on investing in exchange-traded managed funds. AMP Capital's Shane Oliver and Nathan Niemi say the US election, its aftermath and uncertainty in Europe will create market volatility. But investors should be looking past such noise and instead focus on these events as opportunities to buy into unloved markets.
There's too much noise out there, and the trick for all of us is to try and damp down that noise. But the trouble is that sometimes that noise ramps up a notch, and we're going through a period where we might see a bit more of that because we've got obviously the uncertainty about what the Fed will do, events in Europe, various referendum, for example, in Italy regarding the future of the Italian Senate, all of which could reopen debate about whether Europe hangs together. And of course the big one, we've got the US election, which could cause volatility. So in the very short term, we've actually taken a somewhat cautious approach to things. We've cut down our growth exposure. We've taken out some option protection on the fund because option protection was very cheap, and therefore we're looking to protect the portfolio through that volatility. But I think at the end of the day, that's going to throw up opportunities, because if you look at the global economy over the last few years, lots of noise, lots of volatility, but the global economy is still growing, the Australian economy is still growing, and so when markets have their tumbles, it throws up opportunities. There's a good chance there that equity markets will be pushed lower. That in turn would provide an opportunity for us to increase our equity exposure. And we'd probably focus on those markets that are the cheapest, not necessarily the US, but other parts of the world. Europe, Chinese shares, which are still very cheap, the Japanese share market, and maybe even the Australian share market.
So what are the opportunities that you see going forward?
Despite what we hear every day in news that everything is expensive and QE has led to a big bubble in all markets, when you look at emerging markets, they're really cheap. The backdrop is actually improving. Look at Europe, they are again really from a valuation point of view on many valuation measures are really cheap. The earnings backdrop is improving. From a sector level, look at global banks, European banks, Japanese banks. Those markets are trading at a price to book value of about half, which is cheapest in many years. Bank profits have come under pressure because of the fall in bond yields. Now, as markets do, they've just extrapolated that trend to many years in the future. And now we're starting to see policy support.
But over the next couple of months, as we go through a period of volatility, people should start looking at those opportunities, and we certainly will be.
But again, you're going to have to be prudent and allocate to those areas such that it doesn't introduce a lot of risk to your portfolio.
Thanks for tuning in to AMP Capital's Advisor Education Series on investing in exchange-traded managed funds. For more information about exchange-traded managed funds, you can refer to our prior videos or to AMP Capital's website.